If you are a professional trader, then you know that what is the importance of ATR indicator. Now, if you are a beginner trader, then you must know how to use ATR indicator, as this is the most reliable indicator that most professional trader, even the institutional trader, used in their trading. And most likely that you have already known that ATR indicator to use in stop loss. But the real secret of ATR indicator is not in placing the stop loss, but finding the trade entry. And this is probably not told at all in this market. So today I'm gonna show you exactly how to use ATR indicator and how to find an entry opportunity in the market for bigger trade. And this is the real strategy that I'm going to explain step by step in different time frame. This is a must watch video, either you are a complete beginner or a professional trader, because I'm going to show you the real secret of using ATR indicator to find exact entry in the market. Now, before I begin this very important strategy video, make sure that you smash the like button and also hit that subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. Without further delay, let's get started. Okay, guys, let's begin. Guys, okay, guys and girls, so let's begin with, there will be two parts of this video. In the first part, I will show you how to set up ATR indicator, how to read that indicator. In the second part, I will show you how to find entry using the ATR indicator. So to place ATR indicator, either you are using MT4, any platform, or TradingView. So I'm showing on TradingView exactly the same thing. So once you click that indicator and search ATR, you will find coming up in the beginning average true range. So once you click on that average true range, you should see that indicator printed in your chart depending on your setting. So once you see that, double click or click on setting. Once you click that setting, what you need to make sure is that the input that you will be using is 14. That means that 14 period or 14 candles it will take in consideration, and the rest I will keep as it is. Now style, you can use different color, and I will use a bit thicker line so that we can see it clearly. Once the indicator is printed, now let's see what does this ATR indicator mean. Now if you ask the Wikipedia what is an ATR indicator, you will find a lot of information that might even demotivate you because there is a big mathematical calculation. So I'm going to simplify to you how to use that ATR indicator. Now just to know it in a simplest way is to find the previous 14 candle and find an average volatility of this 14 candle, which is considered as an ATR. Now how to read it in your chart? Now, it is very important, because if you look at this candle, for example, what do you see here in this candle? It's 0.00067. So if you look at this candle here, the ATR value for this candle is 0.0006. Now the question comes in, I got a lot of question, is how to read this number. Is this 60 pip, or is it 6 pip, or is it 0.6 pip? To understand it, we need to know how to read the pips. So if you are trading, you know that, for example, if you look at this euro dollar, what do you see this value? 1.0948. So we know that in USD pairs, the fourth decimal is where the pip, except the JPY pairs that you will be looking at. So if you see this ATR value like that, you exactly need to go to the fourth decimal. So if it is the point, then 1, 2, 3, and the fourth place is what you will consider as pip. So if you look at this value of this candle on the ATR indicator, that means that this is the 6 pip ATR for this candle. Now, if you look at the JPY pair, let's look at JPY pair. If you look at Euro JPY, exactly in the same way, if I look at this candle's ATR, then coming back to that candle, what do I see here is 0.151. It's 0.152. Now, we will not take the third digit as it is JPY, then we will be taking the second decimal. So 1, 2. Now if we look at the second decimal, this is where we see that the 15 pip movement of this candle. So the 15 pip ATR value for this candle. In case of JPY pairs, we will be taking the second digit. So 15 pip movement for this candle on Euro JPY. That's how we can simply attach and read ATR indicator in our chart. Now let's jump on to the second part, the most exciting part, how to find entry opportunity using the ATR indicator. Okay guys and girls, so let me quickly explain the real strategy, and then I will show you plenty of examples on the chart to know exactly how to use. The only thing that you need to do after finishing this video, do a lot of back testing, watch the chart for this kind of setup. And in addition, make sure you like this video and also subscribe to the channel for more content like that. Now, first of all, what you need to look at is a market trend, which is very, very important. So you need to identify the direction of the trend. Either you are looking at 5 minutes, 15 minutes, 30 minutes, no problem. The time frame, the most important part here, the trend in that time frame. So once you found the trend, let's say the market is trending to the upside with this bullish trend, what you need is one candle to hit a very important level against the trend. Keep in mind, this is the key points here. The market to break from that trend in the opposite direction of the trend with an ATR value more than 2. This is the important. Why? Because when a market breaks out from a trend with a big ATR value, that's the sign of false breakdown. And you will see that in majority of the time, after gathering that liquidity needed, the market will revert back towards its original direction of the trend. Now this key level or important level can be anything that I will show you now on the chart. It could be a very important daily or monthly support or resistance, can be a very important moving averages, or anything that you put on the chart that consider an area of value. So once you see that the candle has hit that key level, wait for the candle close, and then you can enter that candle based on other factors that you consider in placing the stop loss that I also considering. I will be discussing in the example that I will be showing. Now let's jump onto the chart to see the simplest setup so that you can straight away use the strategy as soon as you finish this video. So, okay guys and girls, so let's look at this example on euro dollar. I'm looking at the 15 minutes time frame. So if we look at 15 minutes on euro dollar, let me replay the chart. What do you see in that area now? So that I'm replaying so that you understand it very, very clearly. Now euro dollar, you can see the market was here forming a structure from a double bottom. Now after forming the double bottom, the market changed this local downtrend to a major direction of the trend. Now major direction, we saw that euro dollar was in an uptrend. For some time it just had a local breakdown, and then the market has formed a double bottom, has again aggressively gone up, has come down for a pullback. Now with that pullback, this is a very important key level, because if you look at the past, what do you see in this level? This is where the neckline of this reversal pattern, the price has broken out of that reversal pattern, has come back down, retested this support, this previous resistance as a support, and we saw that euro dollar completely has broken out of that level, maintaining an uptrending market structure. Now what do you see? Look at this candle here, guys. This is a huge candle that has completely broken against the trend. So the trend here is up. The candle here has a huge body in it. Now the next step, once you see this candle, once you find the key level and you saw the big candle has hit that key level, next step is to find the ATR of this candle. How do you do that? Bring your mouse to that level where the candle has closed and see on the right side or left side, based on your settings. In this candle, the ATR value is 0.0038. That means that 3.8 pip or 4 pip of this ATR. Now once you found the ATR on this candle, the next step is to find the volatility of this individual candle. So for ATR of this candle has to be more than 2 times of that individual candle. Now let's take you to scale from here and then place it starting of the candle and the end of the candle. We see that it's an 11 pip movement of this candle. So if it is an 11 pip or 11.5, that means that 12 pip movement of this candle. So this candle moved 12 pip on this individual candle, which is more than 2 times. So if 4 pip is 1 ATR, then 8 pip will be 2 ATR. That means this candle has more than 2 ATR and it has hit a key level. Again, it's the trend, and also it has crossed the 20 EMA, which is also a very important area of value. Once you found that setup, once you saw the market has hit that key level, the next step is just to go long based on the strategy, and your stop loss should be below the nearest structure. I put it here, and then you can target any 3-to-1, 5-to-1, or at least 2-to-1 risk to reward ratio, and then see what happened. The market didn't look back and has gone back up, has given the profit that you need, and even it might go even further to the upside. This is the best way to use ATR. Now let's see another examples that will clarify you the concept of understanding the ATR and finding the best trade possible in the market like the big boys. Okay, so now let's look at this example on 5-minute chart on gold. Now if we again replay to understand it clearly, now what do you see? That gold is trending to the upside. As I mentioned before, that the first step for you is to find the major direction of the trend. So you see that the market trending to the upside without any question. After a long consolidation here, the market has broken to the upside, and with that trend the price was creating series of higher low and higher high, and suddenly what do you see in this whole move? One candle grabbing your attention, and that candle has broken completely from the structure against the trend. Now what do you see where this candle hit? Look at this level here. In the past, from this candle, from this place, there was a big bullish move, and this pin bar is a liquidity candle. It's a huge in this uptrending market, you see there is a liquidity candle here, there is a liquidity candle here, there is a liquidity candle here. So what is a liquidity candle? In the direction of the trend, it has crossed the previous candle's low. So this candle had huge, so these candles have huge liquidity in it. And now what happened, the next candle, it's a giant candle, has broken all this level, completely has broken out of that structure, which has hit those key levels. Now what do you see the ATR value? Let's find out the ATR value of this candle. Now the current ATR for this candle is, if we look at in this area, which is around 7.9 pip, or let's consider it as 8 pip ATR of this candle. So the ATR of this candle is 8 pip. Now let's find out the individual volatility of this candle. Now let's see what is the volatility of this candle is 18.6 pip. So if we look at here, what do you see? That 18.6 pip. Now let's consider it as 19 pip. So if it is 19 pip, then 2 ATR of this candle is, if one ATR is 8 pip, will be 16 pip is 2 ATR. So if 2 ATR is 16 pip, then what is the volatility of this candle is 19 pip. So it's a qualified for potential entry. Very simple. Now the next step is just to enter the trade with the candle close and putting your stop loss below the major structure. This is the major level. In this move, I will put below this level, and then again I will be targeting at least 3-to-1 or 5-to-1 reward to risk, and that has given a complete movement in this market, and we see that the market keep pushing high and high and has given the full profit target hit. Guys, this is the best strategy you will ever find out there. I have discussed in detail of this, but still if you are not sure about the strategy, I'm here always to work with you. If you want to trade with me, work with me one-to-one or in the group, link below this video in the description area. You can visit the website. You can click join now button to be part of Forex Trading Wizard Academy, to learn the strategy, to practice it with me in the real market. I'll see you there. If not, don't worry, just subscribe to the channel. Stay tuned for all the free content that I'm posting every single day. And thank you for watching. I'll see you soon in my next lesson.